Hi everyone, I'm Paul and welcome to my market update for the 18th of August 2022. Despite the bleak macro outlook, risk markets have been on a tear since mid-June, essentially running over any bad news on their march upwards. Anyone who caught this run, congratulations, it's been a great trade and you've most likely made some excellent returns. However, it's hard to escape that this is a classic bear market rally. You know what they say, when it looks like a duck, walks like a duck and sounds like a duck, it's a duck, or in this case, a bear. But seriously, I think there's a few concerning things about this rally, and in general, people are just too bullish in my opinion. So before we jump into today's chart, I'm just going to go through a few of those points briefly. So if you've seen some of my updates in the past, you'll know that I watch the DXY or the DXY quite closely. Now the DXY is the dollar index. Now the thing we need to remember is that the DXY is a representation of where the markets are either risk on or risk off. So when they're risk off, obviously there's a move to safety and we should see the DXY rally. And that's what we've basically seen over the last few months. And one of the important things is the DXY has broken out of this trading range that's been stuck in for a very long time. So that's a really important point. And as you'd note from some of my previous updates, I think the DXY is going to go higher. The next thing I'm going to talk about is the VIX. Now I haven't talked about the VIX in updates before, and the VIX is just a representation of the market's expectation of volatility in the markets for the next 30 days. And so the VIX has been progressively bleeding lower over the last few months, obviously as the market is going up. The thing that's really interesting about that, and we'll cover this in the charts in today's video, is that we're about to reach an inflection point, like a traditionally low point of volatility, and this is where we see the market make a significant reaction to that. And what we'll see is markets react very strongly when the VIX reaches those very low traditional levels, which is obviously a representation of extremely low volatility or the expectation of volatility in the market. Now I've covered this in other streams, but the Nasdaq in the equities markets anyway has led the rally over the S&P or the ES. Now they've pretty much caught up, but that was one of the interesting things about this recovery rally is that the Nasdaq led in equities over the S&P, which is not really that normal. And a similar thing happened in the crypto markets. We saw Ethereum and many of the altcoins lead the rally in crypto over Bitcoin. In crypto, it's very unlikely that a persistent or meaningful rally in crypto markets will be led by any asset other than Bitcoin. So again, that's another thing to be concerned of in that particular corner of the market, that we've had a rally which is not conforming traditionally to what we would see in the past. Now that doesn't mean it can't be led by Ethereum or altcoins. There's obviously a lot of talk that Ethereum will take over Bitcoin in the future, but that's not traditionally what we've seen, and it's certainly making some other market participants question the strength of this rally in crypto anyway. And on top of all of this, the market outlook remains pretty dour. And based on where we are at the moment, a soft landing seems very unlikely and a hard landing seems almost certain. The only thing that's guarding against a hard landing at the moment, is probably confusing people, is the strength of employment. But pretty much every other metric is looking pretty bad. So we have record high inflation, and not just in the US, across pretty much all the Western economies of the world. And that inflation not only is high, but it seems to be sticky and persistent. And we just don't really know yet if the recent rate rises we've seen are actually going to have any long-term effect. So that's certainly a big risk for markets going forward. The other thing that a lot of people have forgotten is we have the quantitative tightening going on in the backdrop of all this. So the Fed has been buying back assets and rebalancing their balance sheet over this whole period, and they're about to enter into their biggest phase of buying in September. It's about $95 billion worth of securities, and so that's going to occur from September. So we're going to have liquidity coming out of the market, and on the back of that, we're also going to have increasing rates. So pretty much have the Fed baked in another 50 basis point rise in September, and we may have a greater raise than that depending on what some of these inflation numbers and others look like. So overall, the economy is in a pretty bad place. It's technically in a recession. We've had 2 negative periods of growth now, and the only thing that's really staving off that classic definition of it being a recession is the fact that the employment market is still so strong. So if I look at all these points together, I find it quite difficult to be bullish and I really can't put too much faith in this rally continuing. A lot of people are talking about continued rally back to all-time highs or like a V-shaped recovery, and I just think based on these points and just the macro backdrop, that's extremely unlikely. And the most likely thing is that this is a bear market rally, and we're starting to see even now potentially the first sort of turning point. We'll need to see some more price action before we can say that for certain. So I hope you found those points helpful, and it's just worth keeping these in mind as we now start to look at some of the charts we're going to cover in today's video. So the first chart we'll look at today is the DXY on the monthly chart. So we've covered this in previous videos, but we'll just quickly run over it again. So you can see this is that trading range I talked about earlier in the video that we've broken out of. You can see this has been quite a strong break to the upside, and as I mentioned before, you can see all these pullbacks have been bought, and this trend has been extremely strong. You can see we broke through these relative equal highs here, and we've just poked in to this bearish imbalance just up here. We didn't quite break these highs just up here. So what I think will happen is I think this rally is going to continue. I think we'll trade up past this imbalance and into this one. And you can see I've just marked out this swing low here. I think we'll trade up into that zone and up into this imbalance here before we see some kind of consolidation at this level. And if we zoom into our daily chart now on the DXY, you can see this more recent price action. So on the daily chart, we had a bullish fair value gap formed just here, and the market then traded down from the highs. We took out this sell side liquidity here before bouncing higher. Now, in previous videos, I talked about this order block potentially being tagged, and we could have even potentially traded down to here. We didn't end up trading down this low. We just took out this sell side liquidity down here before the market reacted, and you can see the reaction was quite strong. We took out these relative equal highs, this buy side liquidity here, before the market sort of pulled back into the top part of that fair value gap here. And so continuing on with my thesis about what I think might happen on the monthly, you'd expect these relative highs to be taken out next, and then this high up here to be taken out next as the market seeks out that liquidity. One of the things that adds confluence to my view about the DXY is the price action that we see on the euro dollar. So you can see here on this monthly chart, the trend to the downside has been quite strong. So you can just see we've just continued to trade down. We actually went below parity for a period there before the market pulled back. But you can see we took out this sell side liquidity. There's relative equal lows here, and we've traded lower. Now the market has said it's come back up, but I'd expect this trend is going to continue and will push down potentially below these lows here and go back under parity. And so if we zoom in a little bit to our weekly chart, you can see we've almost perfectly traded into a bearish fair value gap. So you can see we've had this bearish fair value gap form on the euro on that weekly chart, and we've traded right back into it. We've closed in completely that imbalance, and you can see we're starting to trend downwards. If we zoom in even closer to our daily chart, we can see the price action even more clearly. So this is that bearish fair value gap that we've formed on the way down, and you can see that as the market's traded back up into that, it's completely rebalanced this inefficiency on this candle here. So we've completely filled in this bearish fair value gap here, and the reason why we filled that is we have the low of this candle here, which is our break-in market structure. This candle here is traded back up into it, and you can see they basically meet this sort of slightly overlaps the low here, which balances out that inefficiency completely. And you can see almost as soon as we've done that, we've done another touch, and then the market started to trade downwards. As it's traded downwards, it started to form this other bearish fair value gap now on the way down, and you'd expect price to now start to target this sell side liquidity at the lows here and then here. So again, this price action on the euro gives me confluence on what I think will happen on the DXY, because the euro is 50% of the dollar index. So we'll switch over now to the VIX. So I haven't covered the VIX in my updates before, but given where it's trending towards, I thought it was worth discussing. So you can see pretty much from this mid-June period that we were talking about earlier in the video, you can just see how the VIX has just trended downwards. It's just bled down, and this has been all one-way traffic. This is on the weekly chart, but you can see it's all been down closed candles. There's been no up closed candles in this whole move. And if we zoom into our daily chart, you can see we're approaching this bullish fair value gap down here. And this is at very historically low levels. Once we sort of start getting down to around 18 on the VIX, you generally see a strong reaction in equity markets just because the volatility is so low. Market participants aren't expecting any significant moves, and it's generally when people are least expecting something that something big happens. And so you can just see how strong this trend has been. And in the past, what you'll see is the market come down into these historically low levels, it'll consolidate, and the VIX will start to climb, and then it just explodes. So you can see how it's done this in the past. And I have an expectation that that is what we'll be looking at in the near future. And when we start thinking about some of those macro points we talked about earlier in the video and about some of our concerns around things like inflation and what the impacts of QT will be on the market, that's going to coincide pretty much when we reach these historically low levels in the VIX. And so if you look at that then in concert with where we are on the Dixie and where we think that's going to go, you start to get a lot of confluence on what that picture is going to look like, and it all meshes in fairly nicely with some of those macro issues that we were talking about earlier in the video as well. So if we switch over to our traditional equity markets now, we're looking at the S&P or the ES, and you can see this has pretty much done what we talked about in the last video, is where we've taken out these relative equal highs just here. We've traded back up into this bearish fair value gap just here. The only thing that didn't happen is I expected it potentially to trade up into this swing low. It didn't quite hit that. You can see it's pulled back just slightly as it's come into that fair value gap and is starting to trade lower. So the question will be now is, where do we think price will go? Will we go back up into this zone and start to rebalance this imbalance? Or is this the beginning of a pullback? So we'll need to see a little bit more price action before we really can confirm this, but you can just see the strength of this move. There's a lot of inefficiency here that could quite easily be taken out in the event that the market has a bit of a pullback. And I think, a bad print on inflation, if the market starts to get a sense that the moves the Fed's been making to control inflation actually aren't controlling inflation, we might see a pretty savage reaction. We've got a similar scenario in the NASDAQ. Now, at the beginning of this rally, NASDAQ was leading, and you can see the S&P and the NASDAQ have pretty much caught up. I expected that the NASDAQ would trade up into this higher fair value gap just here. It hasn't done that. Now, it may have just pulled back and trade higher again before we get maybe more of a pullback. But at the moment, you can see, similar to the S&P, we've taken out these relative equal highs here, we've filled in this imbalance, and the market started to pull back. Again, we've got a lot of inefficiency. We've even got some little gaps and things down here, which could easily be refilled, and would be refilled, I think, quite quickly if we get any sort of negative news. So that's something to keep in mind and just be aware of. Moving over to crypto now, and we'll start with Ethereum. This move in Ethereum has been extremely strong. We've taken out these relative equal highs here, we've taken out these highs here, and we've filled in these imbalances all the way up to this point before the market has reversed. Now you can see that Ethereum is starting to consolidate a little bit around this fair value gap just here. And so the question will be, is similar to the other markets, will we continue this move upward, or will we start to come back and rebalance some of this inefficiency? So similar to the NASDAQ and the ES, there's been lots of inefficiency created as this run has happened to the upside, and so any negative sentiment I think will hit Ethereum particularly hard, because this run has been much stronger than Bitcoin. As I mentioned earlier in the video, the rally in crypto has been led by Ethereum and the altcoins, and so we haven't seen this same move on Bitcoin. So any negative macro news that comes out, or any significant pullbacks on some of those traditional markets like the NASDAQ and the S&P, I think we'll see a disproportionate pullback in Ethereum. And so that's something, if I was long in Ethereum, I'd be very conscious of, and I'd be managing my positions accordingly. And so finally, we'll finish with Bitcoin. And just in terms of eyeballing the chart, you can see that whilst this has been a reasonable move up, and technically we've had, higher highs and higher lows as this price has moved upwards, you can just see it hasn't been anywhere near as powerful as that move that we've had in Ethereum. So in a percentage terms, it's been obviously a great return for anyone who managed to pick the lows down here. But you can just see we've just failed to really break out of this imbalance that we have here. And this low here has really acted like a barrier, and we just haven't seen price be able to get anywhere near that. And if we zoom out to our weekly chart, you can see that this fair value gap has kept the price of Bitcoin contained for this whole rally. It just hasn't been able to break out. So we do have a bullish fair value gap which formed here on Bitcoin, and you can see the market briefly traded into that before trading higher. But even now we're starting to pull back, and you can just see this just doesn't look like there's a lot of strength left in this rally. And the thing that is a concern is you have the all-time highs from the previous bull market below us here at about 19,000, and you can see that's around where we bottomed out in this move, and I think we're going to re-challenge those lows again in the coming week. And so what am I looking for on Bitcoin? So if we zoom right out to the monthly chart, you get a much clearer picture of really where we are and where we've come from. So you can see this pullback from the all-time highs has been obviously very strong. We've had these two up-close candles on a monthly basis back here in February and March. It's been almost one-way traffic since then, and these pullbacks here, these up-close candles, have been pretty mild compared to the strength of these ones. So this really does just feel like a little bit of a speed bump on the way to potentially what will be the final move down. So when I start to think about what that final move might look like, I'd expect that we will take out these relative equal lows, this sell side liquidity down here, and then I think we'll trade down into this bullish fair value gap down here. So remember, this is on a monthly basis. This is quite a big move, and this would take us down into that 12,500 mark that I've talked about in some of the other videos. So this will be certainly a fairly scary level to get to. You can see we'll have to move, lose another 50% pretty much from here to get down into that level, and it'll be pretty hard to buy the market at that point. But I really think this is where there's going to be that sort of once in a lifetime opportunity to get back into Bitcoin. You can see just from the things I've been discussing in the video that there's a lot of validity to this hypothesis. So this is what I'm sort of looking at, and this is what I think will happen based on the points that I've already covered in this video, and I'll certainly be buying quite aggressively if we get down into these levels in both Bitcoin and Ethereum. So that's all for today's market update. I hope you found that helpful. If you did, check out some of my other content. Thanks for watching, and I'll see you on the next video.